right, section 3 for personal finance. Our section preview is we're going to talk about currency, banking, bank risk, transactions, checking accounts, and opening a bank account. In this lesson about banks, you'll learn about currency, banking, banking risk, and security. All right, so let's start the unit. Currencies. Currencies is a specific type of money. An example is the US dollar is a currency and it's used in the US. Europe, the euro is a currency used in many European countries. In Japan, the currency is the Japanese yen. Currencies are based on different units that are worth different amounts. The value of one US dollar is different from the value of 1 euro or 1 Canadian dollar. The values of different currencies are constantly changing in relation to each other. The exchange rate between two currencies tells you how much one unit of currency is worth when converted to another currency. Here's an example. 1 US dollar might be worth 7/10 of a euro, so exchanging a dollar into euros will only give you a fraction of 1 euro. At the same time, the US dollar might be worth 12 Mexican pesos, so exchanging a dollar into pesos will give you 12 pesos. There are many companies that will exchange currencies for you, including banks. Banks will usually give you a better exchange rate than a hotel or airport currency desk will. You'll learn more about banks soon. Forms of currency. We're going to click the tab and go through each form of currency used in the US. The first is cash. Cash is money in the form of paper bills. An example, a dollar bill is a physical paper bill worth $1. A quarter is a coin worth 25 cents. Cash is a convenient and easy way to use because it's accepted by nearly everyone. Because cash is so easy to carry and doesn't show who it belongs to, it's easy to lose cash or have it stolen from you. After cash is lost or stolen, it's difficult to prove that the lost or stolen cash belongs to you. A banknote is a paper bill or note produced by a bank that has a specific value in currency. The standard paper money used in the US is a type of banknote circulated by the Federal Reserve, the central bank of the US. You'll learn more about the Federal Reserve later. The U.S. Department of Treasury is the part of government that controls the finances of the country. The standard bills and coins used in the U.S. are produced by the Department of Treasury for the Federal Reserve Bank to circulate. In addition to standard paper money and coins, the U.S. government also offers other forms of currency. Treasuries are notes and certificates provided by a government as a form of currency. They are worth a specific amount of money and issued by the government. A government bond is a type of treasury in the form of a certificate given by the government to an investor in exchange for money. It promises to pay the investor back a large sum of money in the future. You'll learn more about investments later. Government treasuries and bonds are very easy to buy and sell, and they're often considered currency because they can store value and are easy to exchange, which makes them similar to cash. So let's look at what we know. Let's do this practice. In the US, cash takes which two forms? Cash, well I know cash and I see I've used cash before. Yeah, it's bills and coins. Now let's look at banking. When you have money, you have to decide where to store it. If money is in cash, you'll have to keep it with you or in a safe place. But it's easy to lose money this way and harder to protect it against theft. It can be difficult to keep track of how much money you have if it's all in cash. Also, your income may not be paid to you in the form of cash. Many employers pay their employees in ways that require the services of a bank. A bank is a financial company or organization that stores money for many people. It offers protection against loss or theft. If you keep $10 in your pocket, you might lose it. If you put $10 in a bank, you won't have to worry about getting lost. The bank will protect it for you. If you want a bank to store money for you, you'll have to open a bank account. A bank account is a way to keep track of money the bank is storing for you. The amount of money in a bank account is that bank's account balance. Your bank will keep a financial history for that account with information about the dates and amounts of money that you have put in and taken out of your bank account. This makes it easier to track money you are receiving, spending, and saving. You can get information about your account's financial history from your bank, and you may also keep your own records to compare the bank's information. Individuals can set up a personal bank account. Companies can set up business accounts. A bank account holder is a person or a company with a bank account. You'll learn more about setting up bank accounts later. Choosing a bank. Banks provide many useful services to their customers. They can help you manage your money, pay bills, and receive checks from other people, and much more. When choosing a bank, consider these factors. Trust. Make sure the bank is well known, an established organization that you trust. Convenience. The bank may be especially convenient if your family members bank there also, or if it has branches and ATMs near your home. A branch is a local bank office you can visit. You'll learn more about ATMs later. Banking online can be convenient too. You'll learn more about online banking later. You want to look at size. Some people feel more comfortable using larger banks. Other people feel they get better and more personalized customer service with smaller banks. You need to decide on your account type. Decide whether you want to save money or have money in an account where you can easily access and spend it. You may decide you need more than one type of account. It may be important to have it may be important to you to make sure you can have all accounts you need at one bank. Or you may decide to have one type of account at one bank and another type at another bank. Banks also provide services. Most banks provide the same basic account services, but some banks provide additional services such as financial advising, loans for major purchases, safe deposit boxes, or many other things. Investigate types of services offered and consider which services might be important to you before you choose a bank. It's also a good idea to consider if these are services that might be useful to you in the future. There is some risk involved in banking. Make sure that the bank you choose has policies for dealing with those risks. There's also what's called credit unions. Credit unions accept deposits and make loans, like a typical bank, but credit unions are cooperative. That means that each person has an account at the credit union, is also part owner of the credit union. Most credit unions are not set up to make a profit for their owners. Instead, the purpose of most credit unions is to provide credit at reasonable rates, promote good spending habits among the union members, and provide financial services at a more reasonable cost than banks usually do. Credit unions are usually smaller than banks and often limit their members by a certain criteria. Example is a credit union might only allow members who live in a certain state or work for a certain company. When you're choosing a bank, consider whether the goals and philosophy of a credit union might be a good fit for your banking needs. Account cost. Most banks are companies that want to make money, but they don't usually charge you much money to open an account there. Many banks offer free bank accounts so that you don't have to pay the bank any money in order to protect and track your money for you. The bank may even pay you a small amount of money for keeping money in a certain type of account. Saving accounts are often free bank accounts that actually pay you money. A savings account is a bank account intended for money you will be saving in the bank. Banks will usually offer to pay you interest on the money in a savings account. Interest is a percentage of money in the account. The percentage the bank pays you is called an interest rate. You'll learn more about interest and interest rates later. A bank is willing to provide financial services for you and protect your money without charging you much because the bank can use your money to make a profit for itself. So let's take a look at this practice. What do banks usually offer in order to encourage you to put money in a savings account? Do they offer a loan repayment plan? No minimum balance on your account? Many different bank branches? Or an interest rate. And that's what they do. They pay you a little money to keep your money in their bank. A bank stores money for many people all at once, but it doesn't keep all of their money available in cash all the time because it's unlikely that all the bank's account holders will take their money out of the bank at the same time. Most banks keep only enough cash to cover the amount that bank account holders are likely to take out of the bank. There are other bank risks as well. We've talked about some risks that banks have when handling our money. One risk also is interest rates. Banks also face the risk that interest rates may rise, so they may have to pay higher interest rates on savings accounts than they are receiving from their investments. A bank can also be the victim of a robbery, whether that be cyber or uh, a robbery of a bank. So, which of the following are risks that banks must prepare for? Well, we talked about them. Their interest rates rising because they have to pay more money, more interest, more than what they're actually making on the money they're borrowing. Too many people taking money out of the bank at once, or borrowers who don't pay the bank back. So there is some risk retention for banks. That has to do with the Federal Reserve, which is also called the Federal Reserve and the Fed, is a central banking system in the U.S. and it's the only organization with the right to print U.S. money. There's also the FDIC, which provides insurance on money stored in banks. Banks use different investing strategies that help make sure they don't lose money on too many of their investments. They have also what's called account stability. And a bank can encourage its account holders to keep most of their money in a bank and not take it out by giving them a little extra incentives. Or they might have, or we have seen, what's called buyouts and bailouts. If a bank does fail and go out of business, it may be bought by another more successful bank that takes over the accounts of the original bank. To make sure your money is protected by insurance, what should you find out about your bank? Should you know how many employees work there, where the bank's located, whether the bank offers savings account, or whether the bank is a FDIC member? If it is an FDIC member, your money is protected by insurance up to a special amount. So in summary, we talked about currency, we talked about banking, and we talked about bank risk and security. So after watching this, I will send you assignments for the study question 3. You'll take this quiz 3, and you'll also complete assignment 3 for section 3 of personal finance.